Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Friday, March 5th with the Forex market analysis for you. We're going to check out our disclaimer real quick, just to remind all of you that this webinar is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we are going to be going over many of those signals actually today. Okay, we have the Forex-Trading-Unlocked.com website pulled up. We already pulled up the workstation page from the navigation bar. And we have a Dixie chart here already set up with some numbers and stuff to look at. Yesterday we made a higher move high in the dollar index, inching towards a little bit of resistance that is putting kind of a stop on the dollar. At least that's what you would think until this early this morning. I don't know if you're aware of it, but oil is up another $1 today. It is going on its path to $100, folks. I've been calling for it since December, since we knew Biden was coming into office. And hey, guess what? I said it might take a year, maybe even a year and a half, but it's going to get there. At the rate we're going, we'll be at $100 oil by the 4th of July, baby. And this is having a huge impact on the markets. It's definitely starting to seep into the equity markets globally, and it is also starting to show in the currency. So all those dollar bears out there are getting cracked because of this. Because in certain markets, without a doubt, oil is definitely influencing the trade and hurting the dollar, but it's hurting other currencies even more so, which is definitely giving dollar strength. And is also showing something about flight to quality, where it's going. And guess what? It's not going into the yen, and it's not going into the Swiss, which are the other two besides the dollar for flight to quality. And speaking of flight to quality, we're going to start off with this one too. Guess where there is no flight to quality? In the U.S. Treasury bond futures, yesterday they got down to 157.03. Today they are even lower by another full dollar. You can't make this stuff up. Like, I was bearish this thing for months and wrote it down into this lower 160 handle, and I got out thinking it was time for a little bit of a consolidation and a little bit of a bounce, looking to sell a rally. There hasn't been a rally in 2 weeks. This market just continues to pound new lows. Remember, if you do not know this already, then if you do, remember this for sure, that the interest rate markets is a variable of currency pricing. With the Treasury bond tanking and with the short-term interest rates staying on their ceilings, they're not going down. That spread is causing a flux in currency prices. This is a big thing to watch out for. So we're going to leave the dollar index, and we're going to look at the number one component of the dollar index, which is the euro US dollar. Now this thing has been a grind lower, but it is a confirmed bear now. We have made a lower move low after a higher move high on the big daily chart. We then fell off a lower move high a week and a half ago, and yesterday we fell through key support here to $19.91. We were flirting with these lower move lows. It looked like it may or may not do it, who knows, and then all of a sudden, shabam, we took out $19.51 today. We are still trading lower. Is there a lot to the downside left today? I don't know. It all depends on how the U.S. markets react. I got a feeling you may see a big sell-off in the S&P 500 today. In fact, why don't we take a look at that right now? So when you go to the Forex-Trading-Unlocked.com website, if you go to the Market tab and you go down to Futures, you can take a look at like the 30-year Treasury bond as well as the S&Ps. Now, one thing you have to remember is futures contracts, unless you are paying for data, you cannot get live quotes, so there is a delay here. So as you can see, the S&P 500 had a big sell-off yesterday. Why are we talking about the S&P 500? Because this is going to impact the dollar, which is going to give you direction for being either a dollar bull or a dollar bear. So S&P 500 topped out just like the euro did just a couple weeks ago. Made a higher move low, made a lower move high, lower move low, lower move high, and now it's slammed lower move lows as of yesterday. This is huge. Right now, the stock market value is depreciating. The bond market is collapsing. where is that money going? Where is flight to quality? Well, I'll tell you where it is. The US dollar, the one market that the whole world is like, the dollar is failing, the dollar is going to die over the next few years, let alone the next few months. Well, guess what? When the world hits the fan, it seems like a lot of people still end up going to the US dollar for flight to quality, and that's what we are seeing. So as far as downside targets now, where are we going? Well, we already struck through here. This is big. We have to see how the market closes today, but as a whole now, we are looking for at least for the euro, definitely a test of this $1.1885 level. If this falls below $1.1885, and if oil continues to make, I mean, look at this. Yesterday it prodded just below 65 bucks a barrel. Oh, look at where it's at today, brother. We are up. Crude oil futures are up $1.75. They're trading at 65.58 right now. So that's already $2 above where it closed yesterday, almost. A $2 rally in oil overnight. I can't make this stuff up, folks. This is not about being political. This is just how it is. This is the result of the executive orders on January 20th from Joe Biden. You can thank him for all of this. Now, so this is not going to stop. So the US dollar bull is in play. I would say that over the next week and a half, unless you see a correction in oil or a bounce in interest rates, which I don't know. Do you think that Joe Biden's going to let us be a net exporter of oil again, which would help countries like Japan and some of our other allies? I don't think so. So that's what we voted for, folks, or at least most people did, supposedly. Now you're going to see how this reacts. The good thing is you can make money off of this thing. So it doesn't matter how you voted, whether you like the choice or not, you can still profit, which right now you might as well try and make money because everything is getting more expensive. So here's a way to try and do that. Get short the euro US dollar. Look to sell rallies. Right now we're looking for a test of $1.1885. If we do have an escalating rally in the crude oil futures, especially if they go up another $1 to $3 over the next week and a half, and if the Treasury bonds continue to make newer move lows, I would say that you're going to see the euro US dollar trading somewhere around $1.16 to $1.17. So we'll have price targets for you after the close of today, and we'll see how the U.S. markets react. My view, after having spent over 20 years in the S&P 500 pit, let alone over 30 years in the business, mostly dominated by Forex and bonds in particular, S&P 500, futures, as well as currencies, we are ripe for one hell of a ride coming up, folks, and I am not kidding you. This is going to continue. If you think we had volatility last year that was nuts, well, let me tell you something. You're never going to see something like this. Well, you will if you live long enough, but I'll tell you what, I've never seen the bonds move like they're doing right now. It's just absurd. Like, it just does not happen without central bank intervention. And here's one other market you want to take a look at as well. We'll go to the navigation tab and pull up another workstation page here. Let's go down to the chart, and what we're going to do is we're going to pull up XAUUSD. A lot of our followers out there on Twitch and YouTube are big gold traders. A lot of people have been trying to get bullish gold. Well, I'll tell you what, right now, there is no reason to be bullish gold right now. Lower move lows, lower move highs consistently. Until there is a solid buy pattern here, I would say do not try and catch a falling rock. Everyone has been valuing gold, being like, oh, it's going to be at 3,000, which it may very well go to 3,000. But I'll tell you what, right now, with interest rates climbing, with the dollar rallying, and with crude oil rallying, there is no way that gold is going to get a big rally right now. It's just not happening. It's just not happening at all. It's just a matter of, like, there is a cycle of things that has to deal with equities, interest rates, bonds, and gold. And the thing is, as they ebb and flow, they peak and they go in valley. They don't go in tandem. They follow in a lag. And right now, you're seeing the downturn. While this is a true dollar rally that is now in place. This has nothing to do with just technicals now. This is because of what's going on with the commodities around the globe. There's a commodity-driven aspect to currency pricing, and you can see it. And that is happening right now. Wait till we get to the yen. All right, so we have the euro US dollar. Let's look at the British pound US dollar. Okay, this one here, as you can see, is not breaking as severely as the euro. Yesterday we had this target zone here from this. This is a bearish engulfing line sell signal right here, a high probable Japanese candlestick pattern. This was our target, this lower level here at $1.3828. We pierced through that today, and now we are trading above it. We also took out this low at $1.3855, excuse me, at $1.3855. That was making a confirmed newer move low. So short term, the British pound US dollar is in a confirmed correction. I would not be too bearish this market. This one, especially the reason this one is not down so much while the euro is because of oil. Remember, a British pound is supported by oil prices. The higher oil goes, the less the pound is likely to fall down, meaning test support. Even if it was in a bearish market, which that's the other thing, is the pound is in a bull market since over a year now. So since that is the case, this is we are looking at this as nothing more than a correction for the British pound US dollar. Not so for the euro US dollar. We're looking for the euro US dollar to continue to make new lows. This is also a post-Brexit variable as well. So while the dollar index may continue to climb, don't use that as a gauge to sell the British pound US dollar. The only way I would say that you will see a very extended correction for the British pound US dollar trade to the downside would be if we have oil that happens to come into play. If oil comes into play and then that all of a sudden falls back on support, which right now I'll tell you what, this thing just isn't stopping. Like I said, without central bank intervention and without any major geopolitical things going on in the world, this runaway rally in commodities as well as interest rates to the downside is something I've never seen before. Not like this. Like there's usually some sort of major catalyst, but this is just a matter of, I guess, executive orders and what the president says he's going to destroy the oil industry. Well, by doing that, you're driving up the cost of construction because the reality is gas is only a very small fraction of a barrel of oil. The majority of it goes to plastics for medicine and for roads. So you can look at your cost of medical services skyrocket over the next 3 years, especially the next 3 to 6 months, as we wean ourselves off of being an oil supplier, and with also the price of oil going up. As the price of oil goes up, the cost of roads and reconstruction after all that stuff. So infrastructure is going to start to lag because of the fact that pricing is going to become a very, very big issue. So anything that wasn't already federally allotted in the last administration, as far as new construction and stuff like that for the whole United States, that will go up. This also goes up for the rest of the world. So the British pound is going to be bullish for that reason. We're giving you these fundamentals because it's not a political take. This is just exactly how things are going to go. You can't destroy an industry in one country, especially a big producer, and not expect the other ones to flourish. So the UK is now going to get a big boost. The same that will be for the Canada and for Australia as well. So the good thing is that these countries are our allies, but then also for Russia and the Saudis, they're going to also they're the ones who are cleaning up at the same token. So there you go. We have the British pound US dollar. We already hit our target. We're going to see how it closes and see how the US markets react. As far as this bearish engulfing line sell signal, this was the initial target. As far as extended target, it's hard to have one because of those variables, like I said, with the oil trade. Now let's look at the US dollar Swiss. This thing today, irony of it all, made a higher move high, went through our second target. It's crazy. Yesterday we had a target. We were looking just to pierce this 92.08. If you watch our videos on a daily basis, you'll know that we've been bullish. We were looking for a challenge and a grind through here. We figured it would consolidate and then maybe touch this 92.94 by sometime in the next couple weeks. It happened in a couple days. This is huge. If you look at for the European currencies, what has the biggest move over the past couple days? It is the Swiss. This is a big deal. The UK, since it is no longer part of the EU, it doesn't have to bail out Italy, Spain, and all the rest of these countries. The European Union now is being propped up and held up by Germany and Switzerland, which now has to come back into play floating the euro a little bit, trying to just slow the decay of what's going on. And that because of that, a flight to quality currency such as the euro of the Swiss is now falling under pressure. Also because of the oil rally and the interest rate break. So between a bear market and the 30-year Treasury bond, a major bull market in oil, and also a bull market in other commodities. You got to remember, Switzerland is an island inside a big country, basically. I mean, it's not surrounded by water, obviously, but it's in the mountains, and it doesn't have as many resources as most countries do. It's pretty small. So any rise in commodity prices definitely impacts how the economy in Switzerland will go moving forward. As far as bullish targets, like I said, we've hit these now. We're going to have to wait for the close of today, and then we'll look at some other extended upside targets and some downside correction possibilities as far as which way this may swing. US dollar JPY. Let's put this on the menu here. Boy, this is another one that exploded to the upside over the past 2 days. We had 107.5 was our target that we were looking for. Well, that's right here. And then we had 108.5 as our extended target. Well, today the high was 108.64. This is now a pop that we're expecting to see some sort of little corrective move like this. However, that will happen when we see a turn in oil. This is an interest rate driven play, but it is also an oil play. Japan doesn't have oil. They are dependent upon importing oil, and since we are no longer going to be an exporter, that means we will no longer be supplying Japan. And even what we didn't supply Japan, the fact that when you have more, when competition keeps prices down no matter what's going on, it definitely keeps things from being accelerated. The fact that we are now off the global stage, we are no longer exporting oil, that is a huge thing. In doing so, this now causes less opportunities out there for the rest of the world. Things are more constrictive, and a place like Japan now politically is in a world of hurt because we are their allies. Now everyone that they have to rely on oil from is not necessarily an ally. It's just that's where the market is. That does not bode well for the Japanese yen. So you will continue to see this bullish trend take off. Like, remember when this started at the beginning of the year, it was being viewed as just a correction because the US dollar yen trade had been in a bear market for a while. Now, this is no longer a correction. This is a confirmed bullish reversal of the US dollar Japanese yen. Like I said, unless you see a turn in the Japanese yen, or excuse me, in oil, you will not see a turn in the US dollar Japanese yen. Another striking thing about this is to take a look at gold. Gold is also one of the things that is hammering the yen down. Now, as you can see, it's starting to bounce a little bit today after making a lower move low. It's Friday. I would not doubt that we see some profit taking today. So the U.S. stock market is about to open. It's probably going to get hit pretty hard, I would say, and it's Friday. Why wouldn't you take your profits? It's been an accelerated move, and everything's trending, folks. So if you're on the right side of any trade this week, why wouldn't you take something off the table? So as long as you haven't been chopping yourself up, if you were on the wrong side completely, all you people out there, I'm sure it's going into Friday, and with all the madness in this world as far as what's going on and trying to figure out what's going to happen, I think that's what's going to happen is we'll see a bounce. By the way, speaking of bounces, when you go to our markets tab, we can always go down and take a look at Bitcoin as well. Let's see. Bitcoin, not faring so well, huh? Made this high, made this higher move low, lower move high. This is kind of a key here. If it doesn't get back above 152.8 anytime soon, it's probably going to look for a test of 43,000. So yeah, some people who bought it up here in the upper 50s, don't be surprised that you may still see lower levels, you know, and yeah, ride that Bitcoin trade out. Good luck with that. All right, US dollar JPY. This is where we left off, so we're going to wait for the close of today to try and reevaluate where we can get some upside targets, because now we have to look at the weekly and the monthly to really look at the scope of what we're looking at now, because now we have confirmation of the fact that this trade ain't going away, baby. This is the new trade set for the rest of the year, and guess what? We haven't even talked about employment. Yes, employment, and those figures in the United States are big bond numbers. Unless we see a big jump in employment, meaning a drop in unemployment, you are going to see a continuation of these trends accelerate. Like, guess what, baby? I was born in 1970, and I've been telling people we're 1971 already. The only difference is interest rates are very low. Well, they are still, but at the rate they're falling apart, we could see the Treasury bond market back where it was in the 70s within a year and a half. Wow, you know what that means? People won't be able to buy a house with a mortgage in the United States without paying at least 12-13% for their mortgages. How about that? What's that going to do to the real estate market? Or how about, what if Teddy's only half right and we only get back to par value? How many people can buy homes in the United States at 8%, 9%? Not a lot. Not anymore. Not with unemployment where it's at or rising, not with the cost of inflation coming into the picture. This is the 1970s all over, folks. You heard it here first. I've told it to some other people. I've been calling this out. I'm like, this is going to be a direct reflection. And so that means also, like, if you haven't pulled your money out of the stock market, you're probably going to be really upset over the next couple years, because you probably won't see anything higher in the stock market till at least 2024, 2025. Not calling for a top here yet, but with the way things are going, unless we have change, it's not going to happen. So, all right, this is good to know. We got some big trends forming. Australian dollar, US dollar, bearish engulfing line sell signal, and this one also made new lows. It hit its targets because of oil. You can see how this is retracted today. If you don't like my tone on oil and what it means, let alone the political aspects of it, this is not me being political once again. This is just the reality of reactions. This is how the markets react. This is how traders react. So you can have, everyone has an opinion, but the fact is these are fundamentals of how the markets move. So, and we are setting the tone for a big reaction that's going to continue for the next 3 years, 4 years. This trend is not going to stop. So certain trends that are in motion, they will continue to accelerate. There's bull markets out there that they're going to stay bull markets. Guess what? The ones that are turning, they are becoming bears. The ones that are reversing gears, you are looking at a turn that's slowly happening over the next few months. And I think we have a head and shoulders forming. If I am correct on what's going on with the oil trade and how it's going to impact like the pound and currencies like Australia, remember, Australia is a big oil producer. They're a big commodity producer, so this is huge. The fact that gold is tanking, not so good for them, but that's not the biggest thing right now because oil is easier to drill than gold is to mine. So, and with the escalation in oil pricing right now, that's huge, you know, and especially with China being, see, that's the thing is they supply Japan, they also supply China, you know, so that is a big deal as these engines come back online. So as far as this bearish engulfing line sell signal, we hit the targets today that we'd been talking about earlier in the week, and now we bounced significantly in front of the U.S. Stock market open. So we will see how the markets react today, but I would say that you've probably planted a higher move low here today. So even if other currencies do continue to fall versus the dollar, which I expect them to do, this is one I expect to have a turn. So while the Japanese yen, I think, is going to continue to fall versus the dollar, meaning US dollar yen making new highs, Australian dollar, US dollar, I think, is going to see a little bit of a bounce for a little bit first. The question is this a shoulder? Is this a head? And are we going to just see a little upside bounce and then fall apart? That remains to be seen. New Zealand dollar, US dollar, let's take a look at this. This one here made a lower move low. It went through its target today. Now, this is the one thing that's you may see a little disconnect. The New Zealand dollar is bullish because of oil, but not so much. This one may be in a range trade. It's maybe starting to bobble here. Is probably planted a higher move low now, but this is more like setting a range bound area. So I would say that we're going to make a run for resistance again. Whether we'll get up to 74.63 or not, I don't know. I think that there's a lot of factors that have to be seen for that to happen. I think most likely you're going to see it bobble between the 71.55 and 74.63 for quite some time. That's my opinion. We'll see how it goes. Right now, you got to wait for a signal. You can see it is being in tandem with the Australian dollar. However, this one did make a lower move low. So that's divergence. That's why I don't think it's going to have the strength like the Aussie. Now let's look at the US dollar Mexican peso. We had a question about that from someone earlier through our emails. This one poked a higher move high once again today. Now yesterday it had already done so, confirming that this bull is in place. How strong is it? This is a pretty strong slope. I would expect to see some pullbacks, usually a half a peso, maybe not quite a peso pullback. Yet we are still looking for 21.5 to 22 pesos for the longer term target. I thought that it wouldn't even get to where it's at now, at least until next week. I figured it would be a grind through resistance, but it looks like it's kind of pokey here and wants to continue higher. We'll see how the U.S. stock market reacts today. The thing is, too, is a sell-off in the U.S. stock market isn't good for the Mexican market either, in which case the U.S. dollar once again would gain against a currency like the Mexican peso. So where it's going to fall against oil currencies like the British pound, the Australian dollar, it's not going to fall versus the Mexican peso. It's going to rally. U.S. dollar Canada here. As you can see, this bullish engulfing line, we had set a high right away after 2 days of trading, and now we had set a higher move low yesterday, and now we were trying to make a higher move high. We fell a little short. I believe that's because of what's going on with oil. This is one, it's just like the British pound. It's hard to be bullish the dollar against a currency that produces oil, and especially with what's going on with our relationships with Canada, which I was amazed that am amazed that just in the past week alone that the U.S. White House administration has snubbed a leadership in Canada that I thought that they were pretty much seeing eye to eye on, which was a shocker. So as far as relationships with them, that's actually becoming fuzzy for the first time, and I don't even know how long. Friction between U.S. and Canada is rare. And we know the XL pipeline definitely did a jab, but now also, speaking of jabs, not allowing to any U.S. made coronavirus treatments. I will not call it the other word because that's what they are into Canada. Well, they can thank Sleepy Joe for that one. So, but he doesn't want to give, I guess, the Canadians the treatment. So he's giving them a different treatment. So U.S. dollar Canada, hard to become a bull. I wouldn't say this is a bounce. It still has made a lower move high after a lower move low. It's in a bear market. We are not bullish this thing at all. If it challenges 127.5, maybe it gets a run up to 128.82. It would have to sustain a trade up here for us to even become neutral to slightly bullish. Once again, with the rallying oil market, I just don't see it. And also with the collapsing gold market either. So Euro US dollar, where we started off, you can see this one is the one that still is weighing on itself a little bit. It's trading right around just above the midpoint of the range. It's bounced back after hitting the lows like they did today. It may be the market may be overdone, or be careful, this could be just the first bounce before it slams new lows. So it's a Friday. Expect volumes to die down. Remember that the Asian markets are closed. The European markets are closing in a couple hours. U.S. markets are about to open in a few minutes. I would expect crazy volatility. Don't think that it's not going to be out of the realm of possibility to see the S&P futures down probably somewhere around, I would say, 5,000 to 7,000 points today. In fact, why don't we even pull up, well, let's see. Yeah. Okay, so they settled at 37.65 yesterday. What's the low here? This is 37.22. Yeah, I could see him settling, maybe not below this low. I can see him taking out this low from yesterday. But settling, yeah, I could see him settling somewhere above 37 to 30, probably on 37.22, 37.25. Yeah, we could see a 40 handle break in the S&P 500 today. Very likely. I wouldn't doubt that. In fact, we can even look at, let's go to, since we're at the CME website anyhow. Yeah, by the way, here you go. Crude oil futures are up $1.71 at 65.5 already today, guys. So that movement is still going. Let's look now for the other markets here on the CME site. Let's go to equity indexes and see what our old friends in the S&Ps are doing. All right, here we go. E-mini S&Ps. Oh, we have a nice little bounce here. They're up 44 handles. Okay, so we got a nice little bounce here overnight heading into the opening of today. You got to remember the oil stocks are doing well. Transportation stocks are getting hit. A little balance right there. But we'll see what happens. I would be careful about this. Like, this is most likely going to be a head fake. I would doubt that you see the stock market end higher today. So, all right, well, you've heard that all here. If we don't have any questions, just a couple comments on the Twitch and YouTube. So, okay, well, I want to thank you guys for paying attention today and checking in. We'll see how this volatility shapes up and ends the week, and then I'll have our weekend analysis over the next couple days. But just want to remind you to subscribe once again to our Forex Trading Unlocked channel on YouTube or Twitch, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. That way you can learn how to trade these patterns and also capitalize off of them as well, and get ready for some crazy volatility to do so over the next couple months. Have a good weekend. Take care and good